It's your boy Crypto Blood, and welcome to another Kicking In session. We've got Dr. Jim Willie, editor of the golden-jackass.com. He picked Yellow Brick Road, Wizard of Oz for the song today, guys. Couldn't expect anything different from Mr. Willie. How are you, man?
I'm
Glad to
doing
have
pretty
you on.
well. I'm doing pretty well. Good to hook up again.
Why the Yellow Brick Road, Jim Willie?
Well, I think the Fed is in extraordinary problems right now. Extraordinary. I made a call 2 months ago. It was around August. I made a call that the Fed is in such trouble that they're going to have to reinstall QE, the bond purchase program, reinstall all the different channels that connect to it and are part of it, and are going to have to go down to 0% and reverse course of all the tightening. I said this in August. I made hints of it in July. And here's a great little phrase. I read this once and I use it. The gold market sniffed this out. And that's why the gold price went over that barrier of 1350 to 1400. We're bouncing around 1500 right now, and we're dealing with a what I call a bullish wedge. It's like it's coming to a point where it must make a decision up or down. Let me try to get this. Yeah, there you go. We're just bouncing around, and we're running out of time. And it's got to make a decision. I think it's going to make a decision to go up. The Fed is in absolute utter desperation. And I'm quite certain that we've got at least one bank and maybe one sovereign who are all in trouble. I mean, like bankruptcy, failure, illiquidity to the extreme. They like to use the word illiquid, Jerry.
Right.
Instead of bank failure.
Yes.
They like to use the word illiquid instead of a sovereign debt default. They like to use the word illiquid instead of contagion, which is spreading across the banking industry. If you're keeping up with the repo, I need to define this. If you're keeping up with the repo facility, you will come to understand that it was like 50 billion, 45 billion a night. I mean, overnight refunding, overnight aid in desperate situations. And then a couple weeks ago, it ramped up a bit. And then it was 80 billion on 2 separate days this week. And it closed out the week at 130 billion. I'm talking about each night.
Yeah.
Now,
and it was oversubscribed at a record high. One night, the repo markets were oversubscribed. I think like 7 billion or 7 trillion. I can't remember the number. Billion. Yeah, it was.
Yeah, they would offer.
Explain what's going on with that.
Okay, they would offer and say, look, we've got 80 billion available for you banks that are in trouble. And up came 87 billion in requests.
Right.
More than was put on the table.
So when that happens, what happens if they're oversubscribed? Do they go ahead and issue that additional 7 billion?
Yeah, because they don't want failures.
Right.
They don't want another Lehman Brothers. Now, I've been making the forecast for the last, really, it's been since the Ukraine war in 2014 and the sanctions against Russia and all this hubbub. I've been saying that they're doing all the wrong things and they're creating a new subprime bond, but it's not mortgages. It's the U.S. Treasury. The U.S. Treasury now has all the characteristics of a subprime bond. It's got oversupply. It's got very poor demand. and it's got false mechanisms to fund it. These are all the things that we called subprime about the mortgage bonds in 05, 6, and 7. So the Fed is desperate to prevent another Lehman Brothers because something happened in 2009 and 10 that's extremely important. Before 2009 and 10, Morgan Stanley, now you people who know baseball, especially American League, Morgan Stanley was the designated hitter for bank derivatives like interest rate swaps. The IRS swap, not the Internal Revenue Service, the interest rate swap. Now, the interest rate swap is critical for creating phony demand for the treasuries. And it relies on a near zero cost feeder system, as in the Fed funds. So input the zero cost treasury bills borrowed, output a treasury bond demand. Now I mentioned Morgan Stanley because up to 2010, they were the designated hitter, and they actually had $9.5 trillion worth of interest rate swaps on their books for everybody to see who had the interest and the intelligence to check the Office of the Comptroller and the Currency Report, the OCC report. Now, as we know, out of 100 people in the financial industry, maybe 2 would look at that.
Right.
And of the 2, 1 would not understand it. So the OCC report gave away the fact that when the Treasury bond had a rally that went from 2.4% to 1.6% in 2009, it was not to safe haven, as the Fed and the US government claimed. Instead, it was the interest rate swap derivative at work with the zero feeder system cost. Now, what happened after 2010? The powers that be decided, well, we can't have all that risk sitting with one bank. Now let's spread it around to Goldman Sachs, Citibank, Wells Fargo, Wachovia, Bank of America, Barclays. Let's spread it around so that it's not just Morgan Stanley. Now we got 10 of them. So what happens if we have a bank failure, Jerry? We get 10. That's what they're trying to prevent.
Interesting. So what do you think, which bank do you think caused the catalyst or was the catalyst to having that spike in the repo rates from 2% or less than 2% up to 10% and really got everything going with the feds and them injecting money every day essentially since early October? Which bank do you have any intel on that? Or
well, let's first answer a question: which country?
Okay, didn't think of it that way.
Well, so you're kind of U.S. centric.
Right.
That's okay.
Right.
And we do have problems inside the U.S., but let's first think what countries are in trouble.
Argentina. Well,
Deutsche Bank.
Deutsche. Right. There you go.
Okay, it's funny because 10 minutes before we began hooking up with this link, I responded to a client in Europe, and he wrote me with some evidence and said, all this repo activity is Saudi Arabia in trouble. Now, I was told 2 years ago Saudi Arabia is bankrupt.
And they have no more oil to produce.
Well, they have some oil. They're still pumping oil, but they lie, and that's the Aramco IPO, the stock deal. They lie and say they have 260 billion barrels of oil. But gee, wasn't that the figure 25 years ago? I mean, come on. I understand the concept of new discoveries offsetting production, but
not an infinite.
not this time. Okay, so Saudi Arabia is got their testicles in a vice, if they have any. And that's not an assumption I'm willing to accept. They got a lower oil price.
Mm-hmm.
They've got a war in Yemen that's very costly. And they've got raids on their sovereign wealth funds. They've also got higher requirements to keep the population docile, like, gasoline subsidies and food subsidies for the poor, all the things that prevent riots and revolution. Now, the Saudis are mainly suffering from the lower oil price and the Yemen war. Why did the Saudis a year ago offer their first issuance of a bond? Because they're broke.
Mm-hmm.
Okay, now that's not a really difficult leap. They had tremendous revenues when the oil price was over 80 and 90. And now that it's under, they issue a sovereign bond. And they've got their own problems related to it, like the currency swap for their real currency, the forward swap. At times it's in a crisis mode. So you can't just issue a bond. You need all the surrounding elements to support it. Okay, that's just Saudi Arabia. Maybe they're redeeming a lot of their treasury bonds because they're broke. Maybe they're redeeming a bunch of treasury bonds because they want to have a kitty in case their Aramco stock issuance is a failure. Okay, that's Saudi. That's not even on the radar for most people.
No, I didn't think of it. Think of it. So how does that relate to Deutsche Bank, though? Or is there
it doesn't relate to Deutsche Bank. Deutsche
Okay.
Bank has got a parallel problem.
Okay.
Deutsche Bank has a derivative problem. In 1998, they were forced, because Wall Street stuffed down their throats, Bankers Trust. And in the 90s, Bankers Trust was the designated hitter for the Fed in setting up derivatives to keep everything coochie-coo and stable. But behind the scenes, it's like a lot of machinery running really hard, hissing and moaning and requiring a lubrication. So to avoid the regulatory eyes, Wall Street shipped off Bankers Trust to Deutsche Bank, and they reluctantly bought it with their heads receiving a pointed gun. Now, 15 years later, they did some BaFin audits and were absolutely aghast at what they found, and it was 95 trillion euros worth of derivative junk. They've cut it in half, and it's now about 45 trillion of derivative junk. They've also got in Deutsche Bank a lot of bonds from the Southern European decrepit pigs nations that were forced into the European Union and the monetary authority with the common euro. I'm referring to Italy, Spain, Portugal, and Greece that are all in pathetic debt situation. And Deutsche Bank is holding some of that debt. They're also holding some commercial debt from those southern neighbors. In addition, and this is probably the biggest source of the immediate pressure for Deutsche Bank, they've got about 30 exchange-traded funds that are all synthetic in nature, which means that they're traded actively and they don't actually hold assets. I think that's what synthetic means for the most part. But anyway, they've got $15 billion worth of synthetic ETFs that they tried to ship off to the French banks. Now, I heard the volume was 15, not 50, but 15. If that's the case, then that's only a small amount. But I've been doing more research and listening more and hearing more and getting information passed my way. And what I'm coming to learn, Jerry, is that Deutsche Bank is in trouble on 5 fronts. It's not their derivatives only. It's not their ETFs only. It's not their commercial loans to the pigs nations in the South only. It's more like everything, including their Deutsche Bank US subsidiary, which I believe is the biggest problem of all under the Deutsche Bank roof, their US subsidiary.
Okay, they're U.S. Okay, gotcha.
Now, I don't know if their US subsidiary is holding some of this derivative junk. I suppose some is in the US subsidiary. I don't know. But let's move on. I think there are 3 or 4 big US banks that are badly insolvent. Every time I hear a list of suspect banks in the United States of the large variety, the name Citigroup is on it
Okay.
because they have a disproportionate amount of leverage and derivatives. And remember, their chairman of the board was Robert Rubin for a while. And are you familiar with the Rubin doctrine?
No.
Destroy tomorrow to save today.
Sounds American.
Yeah. In other words, let's make sure in, say, the year 2015 and 16 that there's a total wreck in 2019 just so we buy the next 2 years and have an opportunity to commit more fraud in the U.S. banking industry with permission by the Fed and the U.S. government because we're running things. Okay. In addition to Citibank, I got information last May and June that Wells Fargo probably had a failure event. And I've been trying to piece together what happened and how it happened. And to me, it seems like the evidence was the arrival of 30 Department of Treasury officials and agents, and lots of bank accounts that went dark, a few, not many, a few that went missing and never were found again. And to me, it meant that there was a failure, that they tried to keep quiet, and they had a rescue, and they infused, let's just say, 3, 4, or $10 billion of Fed funny money with blessing from the Department of Treasury. And there was a failure at Wells Fargo. Let me tell you why I think it might have happened. During this trade war with China, Trump is doing a lot of nasty things. Now, he might have an honorable agenda, and there might be a significant amount of, I don't like the word espionage. There might be a significant amount of activity that's really kind of vile or dishonest or unpatriotic for an American to participate with. And as a result, I came to learn that the US government was encouraging China to remove a lot of their assets and deposits at Wells Fargo.
Wow.
There are 2 impacts that come from that.
That's not good for Wells Fargo.
No, especially when you consider that there's leverage.
Yeah.
Okay, so let's just say the Chinese removed $15 billion suddenly. Well, that would require the Department of Treasury to arrive and fix the situation and plug the holes with some funny money. But bear in mind that I came to learn something else. Bear in mind that the Chinese have had a practice at Wells Fargo for the last 15 years. They would make a deposit and they would borrow $10 for every dollar of deposit and then go shopping for U.S. urban commercial property. Now, if they put in 10 billion, that meant they had 100 billion to go shopping with. If they put in 15, it meant they had $150 billion to go shopping with. If they pulled 10 billion, that means that the U.S. commercial property market might be at risk as a result. Wow. Now, 2 more factors might explain. Oh, and I didn't say, but Citibank, Citigroup, and Wells Fargo, as a result, might have very heavy repo demands
Okay.
to prevent a failure. Okay, now there are two more that I identified with my client in Europe. Just, kind of off the cuff and thinking a few minutes, and I responded, and then I got my water ready and prepared the hair that's still remaining on my head for the show. And there are two more factors that relate to the U.S. directly at the federal level. For the last 6 months, the bond dealers have been really moaning and groaning that they're obligated to buy treasuries at auctions, but they don't have sufficient buyers as bond investors. So they're getting bloated inventories, running low on money, and wouldn't it make sense that they would appeal to the Fed window for repos to take some of it off their hands before they croak? Okay, that's primary bond dealers. And I thought 2 years ago that one would fail. And instead of failing, one resigned, and I think it was Wachovia, but don't hold me to it. The second federal factor is that we've got $1 trillion to finance. And it might not be possible for the interest rate swap machinery to cover the majority of that. We don't get any data ever on the interest rate swap derivatives, and we get very little even on how it works.
That's all the shadow banking, right? No,
that's not shadow banking. That's derivative machinery. That's not shadow banking. Here's what shadow banking is. I want to buy a car with GM, and I don't need to go to a bank because GM has a financial arm that will lend.
Gotcha.
That's shadow banking. I want to get a mortgage, but I'm not going to go to a bank. Instead, I'm going to go to a mortgage lender that's got a lot of private equity and mortgage bonds behind it floating in the bond market, and they're willing to lend me and at some decent terms, but they can't do it for thousands and thousands of people. I just happen to have a broker
like one-off OTC type of loans then, correct?
Well, OTC is those are for leveraged contracts and various things.
Okay.
I'm talking about unconventional lending sources.
Gotcha.
Okay, for instance, GE Capital.
Oh,
that's
man,
not a bank.
That's a whole nother story.
Okay, there you are. I've given three: General Motors, GE Capital, and a lending institution from private equity. That's all.
Understood.
That's three types of shadow banking.
Understood.
And they're in trouble. They tend to have a better asset base than the banks because the banks follow the lead and the bad advice of the Fed. They get themselves into trouble by following the Fed. The Fed will say, go ahead, lend this amount, operate on this ratio, and 2 years later, it causes a problem.
When has the Fed ever been correct about anything?
Nothing. I don't think. Well, maybe before Greenspan. Paul Volcker was actually very good.
From just reading about it. I wasn't alive then, but yeah. Paul Volcker.
I remember when I was in college.
The Volcker rule.
Well, remember Volcker presided over the 14% interest rates.
Yeah. And he was hated for that, right?
Oh, but Wall Street eventually loved him, and here's why.
Right.
Here's why. It's very important why. Volcker opened the door for Wall Street to start leveraging up and engaging in the carry trade. What they did was they borrowed gold, and what Rubin did as Treasury Secretary was force to 0% the gold leasing rate. Okay, so they borrowed gold, dumped it on the market, borrowed at 0%, and bought Treasury bond futures contracts. That forced the interest rate down. They had tremendous gains at the nominal level for bonds, but they had 25-to-1 leverage, so they made trillions. and they gutted Fort Knox, and they drove down the gold price. Hey, a winner all around for the fiat crew. So now, when they ran out of gold, where was the next source of free money for the carry trade? Following Lehman, I made a forecast that they would go down to zero. Of course, I was called an idiot in 2007 and 8 and early 09. And later, I was not called an idiot. I got hate mail. They called me stupid.
Mm-hmm.
Following that, I made another forecast that the U.S. government would suffer trillion-dollar deficits starting around 2011 or 12, and they would continue every single year for as far as the eye could see. And I got detractors saying to me, Jim, that's a stupid thing to say. Of course not. That will never happen. Well, it did. And then they had other detractors that said, look, the official, the official U.S. government deficit is only $600 billion. Well, yeah, but they excluded 300 for hurricane relief, bond rescues, cost overruns for weapons systems in the military, all these one-offs. Well, I don't count one-offs. What I do is say, what was the deficit at the end of fiscal 2013? Do you mind if I do a calculation on my little napkin and subtract what the debt was at the end of fiscal 2012? Because that's how you get $1 trillion.
Mm-hmm.
So the debt went up $1 trillion, but the accounting said 560, 600, 580. Now the accounting is saying 960 or something. But you got to count the one-offs, which will push it up to about 1.3 or 1.4 trillion. So we've got to finance this debt. And it's not working entirely with treasury bonds in auction or the derivative machinery that produces the fake demand. They're in trouble. They're in big, big trouble. And I chose the yellow brick road, Jerry, for a simple reason. When I made the forecast in July and August that they were going to reverse course on tightening and bring on QE and cut interest rates, that the eventual location and destination will be infinite QE forever at the zero bound.
Mm.
Now we got repo evidence that showed just last week a ramp up to 80, which was insufficient, and then a move up to 130 billion on a single night. I don't think that the 80 billion is going to be a level that they return to.
No
what I'm
way.
saying is
Yeah.
it's going to be elevated and continuous.
Well, they're calling it, what is it, POMO, right? Permanent Open Market Operation. Is that? I mean, they're saying they're going to cut it in January, but come on now, we know that's not. They've opened that can of worms, and it's like you
I
said.
prefer
I
to
think
call Pandora's box.
yeah, right.
There's
It's
another. I don't like can of worms because if you bring in some animals or birds, they'll eat the worms and the problem's gone away.
Mm-hmm.
I like two phrases. They let out of a cage 100 cats. You cannot herd cats.
Mm-hmm.
It's hard enough to herd roosters. I just saw The Heart of a Champion. It's a movie with Sylvester Stallone and the young kid. I cannot remember his name, but he had a role in the Black Panther movie.
Yeah, Michael B. Jordan or something like that.
Yeah. Michael B. Jordan, right.
Mm-hmm.
There was a scene where Stallone reluctantly trained Michael B. Jordan as a boxer, and he said, catch that rooster.
Mm.
It's not easy to do. It's not easy to catch a cat. I mean, I had a tremendous challenge when I had a little cat in the Boston area, and I had to rely on cornering him into the fence, the corner of the fence. And I had to frighten him by yelling, and he'd get scared and he'd just cower, like that.
Mm-hmm.
Okay, it's opening Pandora's box, which is a mythology story. they opened the box with QE.
Yeah.
And that was 2011. I got that correct as a forecast.
Yeah, you
I
did.
forecasted that a year in advance. They opened the box, Jerry, and what they arrogantly did not want to admit is that they can never reverse on it. Because the whole system, a lot of people aren't really clear on this. No, the problem does not go away. Different problems become rooted. There becomes not a tendency, but it's a deep ingrained dependence for the easy money and the cheap interest rate money. So that when they try, I was astonished in 2015 when they went to tightening. I thought, they can't do that. They're going to cause tremendous problems.
Yeah, I was shocked as well.
But did you expect that they would eventually cause such problems that they would reverse and go back to QE again?
I did, but I actually thought that we would see a big, like, the reaction from Wall Street was a knee-jerk reaction. They went down, you know, we dropped there for a few months or whatnot, and then they priced it in, and I was really shocked that that happened. I thought we would see pandemonium in the markets,
Let
in
me
the equity
explain a couple
markets.
things. This is really quite interesting and gets at the heart of some of these repo problems. I did a little bit of water went down the wrong tube. When they decided to do their tightening, they actually made an acronym. They called it QT,
Yes.
quantitative easing versus quantitative tightening. When they came out with an acronym of QT, I concluded this is for real. They're going to continue because they made an acronym for it. And that's kind of silly logic, but why would they create an acronym unless they're going to use it?
Yeah.
Okay.
But then Trump bullied them, right? Or do you think that was going to happen anyway?
I think
Them
market
reversing course.
forces and, the difficulties with the stock market, the difficulties with higher deficits, the difficulty with, just getting successful auctions with sovereign bonds, which just means national bonds like Italy's bonds or Argentina's bond. That's a sovereign bond. Saudi's bonds. It's a sovereign bond. The pressure was going to be inevitable. I actually said in my newsletter in 2015, just give this 2 or 3 years. It's going to cause some very severe problems with the economy and with the bond market and with the credit market, like companies borrowing for, expanding for a new plant and equipment. And then the bond market, there's a lot of plant and equipment that's done with corporate bond issuance. But what we got was a real perversion. Corporate bonds were issued and they used some of the money or a lot of the money to buy stock. Okay, the perversions just came out of the woodwork. Okay, let me explain a couple things. Pardon me, I've just, when I talk a lot, it causes vibrations in my nose. And
No problem.
I got to tickle my nose. When they did the first interest rate hike, something very unusual happened. They did a reverse repo. And I thought, well, what the heck is that? We didn't define what a repo is. A repo is a repurchase. The Fed would say to a big bank like, say, JP Morgan, we know you're short on cash. We'll repurchase some of your treasury bonds and bills, and you'll get cash. Why do they call it a repurchase? Well, because JP Morgan bought the bond. Now they want to discharge the bond, and the Fed is buying it back. So a buyback of a bond is a repurchase called a repo.
Repo, right.
I think it's called repurchase operations, therefore repo. Okay, I noticed that they played some games with the repos to kind of unwind the rate hike 3 years ago.
Yeah.
They did another rate hike, and I thought, okay, what are they going to do this time? They have to play a game. What they did was they played a game with the excess reserves held at the Fed on behalf of the big banks. But the ugliest of all was the reverse repo. And I need to define it and to explain it. It's not hard. If a repo by the Fed is to buy their bond, a reverse repo is to give them back their bond. Why on earth would the Fed want to give back the bond to the big banks and take their cash if the bank is short on cash? What's this all about? I'll tell you what it's all about. It's about to relieve the pressure of a failed treasury auction, because you cannot leverage cash. You can't say, well, we got $1 billion in cash, so we're going to buy $10 billion worth of treasury bonds. No, no, no. You can't leverage cash. So instead, they had suddenly $1 billion in treasury bonds, and they didn't use it to buy 10 billion in treasuries, Jerry. You want to take a guess what the standard leverage is?
For these, I would say about 5x.
Well, I just gave you 10 and hinted that it's not sufficient. It's 100. Yes. They leveraged 100 to 1 on their repo acquisition of their bonds again in order to ramp up the leverage for treasury bond purchases. So before, in a calm environment, they might leverage their bond assets 10 to 1 and buy more bonds. Now the Fed is saying, we're in a panic, we're going to do reverse repos, and we're going to allow you to ramp up 100 to 1 in leverage and buy the remaining treasury bonds so we don't have an auction failure.
Wow.
Okay.
It's a hot mess, man.
Okay, now let's back up a bit. If a big bank is reducing their cash and increasing their leverage, what is the analogy? And I've got one. They're like the Sears Tower in Chicago, which you're familiar with, being in Michigan. Except now the lobby footprint for the building is half or less than what it was. And now it's not 100 stories or 110 or whatever. It's 220 with a smaller footprint and a higher height. So is there any risk of failure? Now, what's the risk for a tall building that's too narrow? High wind. What's the high wind analogy for the Sears Tower as it applies to treasuries? How about bond auction problems? How about bond market illiquidity? How about lack of bond demand? How about over leverage? How about over dependent on derivative machinery? How about foreign abandonment of treasury bonds? How about Saudi insolvency when they used to be your petrodollar partner? How about Chinese pulling out of Wells Fargo? How about the Rubin principle being applied to Citibank, and now they're in trouble? Okay.
How about
a butterfly? Did I leave out anything?
Butterfly flapping his wings.
Butterflies
I mean, anything
in Brazil.
Like yeah, like that's a fragile situation there.
Okay, so we got lots and lots of threats to the bond market while they created the treasury bond to be subprime in all its characteristics. Now, I don't want to get into the mortgage bond and all the different details and the bad underwriting and the MERS electronic database for titles and the fraud there and all the different improper mortgage.
You know, I was just watching, I know we're not going to get into that in this show, but I was just watching something on Real Vision regarding a gentleman that came on, and he was really breaking down the whole mortgage game, how, and this is a recent video. A lot of these mortgages are not on the books, and I mean, we knew this, but it was just bringing like real numbers to the screen, to the audience, about how a lot of these mortgages are not listed as default. They're letting these people stay in these homes. It's going on year 4 and 5 in some cases. And what was interesting, and I thought was very unfair, Jim, is that they were foreclosing on homes less than a quarter million and allowing the families to stay in the homes above a quarter million. And I'm like, who does that affect most? That affects the inner city. That affects, people, lower class. And they're letting them go bankrupt or foreclose, but allowing the families that have homes with mortgages above a quarter million to stay in their homes.
To refinance.
To not even refinance. In this case, they were just letting them stay in the home, and they're renting from them. So the families are renting from the banks in order to keep it on the books as not a foreclosed, man. It was crazy. I'll send you a link to the guy. He's done a lot of research on it. But
the games that were played back 10 and 12 years ago were unbelievable.
Yeah.
My favorite is the ninja loan. No income, no job or assets.
Mm-hmm.
You want to borrow? No problem. We got plenty of funds. So back then, the subprime mortgage bonds, they drove the crisis. And what the Fed does not want to admit now is that the Treasury bond is in trouble. It wouldn't be in trouble. Well, how can I put this more positively? Evidence of the crisis in Treasury bonds is a magnificent volume in overnight repo. Now, the fact that they want to go to POMO, which is permanent open market operations, just means that they're trying to move it away from an overnight operation into something a little bit more permanent. In other words, they're trying to make the infinite QE a little better rooted. So it's not temporary, it's permanent, and that's the forever. So we've got infinite QE with the high volume. We've got forever with the rooting from the permanent nature of POMO.
So all these operations that we've been talking about for the last 30 minutes or so, is this what modern monetary theory is? Is this what we're experiencing now?
I don't think so yet. Let's back up on MMT, modern monetary theory. What we're seeing now is the consequence of 7 years of QE. Now, 7 years of QE gave us lots and lots of opportunities for the Fed and its Wall Street agents to do a considerable amount of mortgage bond purchases. They also did a considerable amount of theft, which is what the Michigan State professor, oh gosh, I've got his name. Oh, can I find it fast? I don't know if I can find it. I don't think I can find, pardon my head. Yeah, there it is. Catherine Fitz and Mark Skidmore, they issued a report where they only examined 4 departments and they found $21 trillion missing. The 4 departments were Treasury, State, Health and Human Services, which has Fannie Mae, and the Pentagon. The biggest violator is the Pentagon, which has not had one successfully completed audit in a generation. Okay, so we've got all these Treasury bonds that were purchased with derivative machinery, easily lent money from the Fed, funny money, I call it. And during this entire process, we're issuing sanctions to nations. The Ukraine war resulted in Russian sanctions. There were Iranian sanctions before that. The Iranian sanctions were resumed after the nuclear pact was dissolved or rescinded by the US side, but not by the Europeans. And now you've got this international global movement to discharge treasuries. Now, then came on the Belt and Road Initiative, all during QE, Jerry. The Belt and Road Initiative called for somewhere around $4 or $5 or $6 trillion of projects. And it's not a known fact, but I've got data that indicates in the first 6 months of 2019, a total of $600 billion worth of completed projects and transacted trade, means completed trade payments, were done on Belt and Road Initiative projects in the first half of 2019. That's on track for over $1 trillion in a single year this year. Okay, so where does the funding come for the Belt and Road Initiative projects? They're dumping treasuries. What is all the trade? I don't mean most. I mean all of the trade on the Belt and Road projects. It's non-dollar. They've got a good portion of euros, to be sure. Maybe British pounds also in there. I doubt much. But it's euros and predominantly Russian rubles and Chinese yuan. I think the Chinese yuan is going to become sort of an Eastern standard for trade payment. Okay, so you got during QE, all these de-dollarization movements, all these sanctions that force the nations to go around the dollar. And that now the competitors to SWIFT for the channels, the CIPS, it's a cross-border interbank payment system by China. It's not the Chinese interbank payment system, but you can think of it that way because they run it. There's a Russian payment system, and now there's a German-Iran payment system called Instex, which the master chess player Putin has designated as his adopted channel. He's trying to get involved with the with the German-Iranian oil trade. He's trying to get, here's how. Putin, I'm bringing in examples of non-dollar trade, which requires treasury bond dumping, abandonment, and no longer adoption and usage. Putin is saying to the Germans and Iranians, we'll buy the Iranian oil. We'll take charge of the blending, which means handling viscosity and contaminants like methane gas mixed in. And we'll make sure Iran has liquidity to some degree. And we'll get involved. But we're also going to encourage Turkey and we're going to encourage India to join this. And at the same time, Britain and France joined it. So it's Russia, Germany, France, England to come, Turkey to come, India in buying Iranian oil. Oh my gosh, this is going to become big and it's going to be making the Europeans a Euro standard oil market. You can't just say the petrodollar is dead. You can say it's shattered, it's halfway to the cemetery, and it stinks. It's decaying matter. Okay, this is all during QE. I said way back in 2011, we're not just going to get QE. We're going to get all the financial diseases that come with QE. Now, here's one that very few people think about. Suppose you're a mortgage fund traded stock. You're a company that engages in mortgage bonds. Let's suppose that you're a small sovereign nation, like say Kenya, and you've got some reserves. That's maybe a bad example, but you get the idea. And you see in 2011 and 12 that the Fed is buying mortgage bonds. And you're thinking, wow, that seems a little bit wrong. That seems a little bit off. That seems a little bit heretical. That seems a little bit risky. I'm going to sell most of my bonds and let the Fed buy it. So the margin of the bond investors vanishes. What are you left with? Well, you got the German government, you got the French government, you got the British government, you got the Canadian government, you got Hong Kong, you got all these sovereigns, you got the Arab monarchies in the Gulf region. So you lost all the marginal secondary, but you kept all the main. They're now losing the main. They wrecked the bond market by being a guarantor, and I love the phrase, buyer of last resort. Buyer of last resort has a very important meaning. If you're a buyer of last resort, why is there a last resort? What's the last resort?
Right.
You're running out of buyers. You're running out of investors of treasury bonds. So the Fed is the buyer of last resort.
Mm-hmm.
They're the buyer of last resort because QE destroyed the bond market.
Right.
Okay. If you're a buyer of last resort, what happens over the passage of time? You got a ruined balance sheet. You're holding junk.
Mm-hmm.
You're setting up
that they tried to start unwinding with QT, but
and it didn't work.
And it didn't work.
So now they're admitting it didn't work. There's still tremendous amount of global bond dumping. They've lost the marginals a while ago for bond investors, and now they're starting to lose the core. Trump just installed several thousand U.S. troops in Saudi Arabia in the last 2 weeks,
Mm-hmm.
or made an announcement of such. I've got a savvy jackass colleague who said, Jim, it's so that they feel pressure not to sell more treasury bonds.
What's going on with Japan, Jim? We know that Japan is the biggest or second biggest holder of our debt. Second, correct, to China. I haven't heard much from Japan in the news and the headlines and stuff. What's your take on Japan's position in this whole new world that we're in?
Okay, I'll answer your question, but then I want to get to a topic that's really important to me. I took a note for.
Okay.
I jot down notes while I have interviews, and sometimes I veer off with your permission. Okay, I believe Japan is the #1 treasury bond holder. I believe the official data for China is a lie.
Okay.
They're both at around 1.05, 1.03, 1.1 trillion.
Mm-hmm.
Okay, there's not a whole lot of difference between them. I came to learn years ago that the Chinese have been doing swaps, and they probably even have help with JP Morgan and Goldman Sachs to do it. They might do this, for instance. They might say, we're going to put $50 billion worth of treasuries in this fund, have Wall Street manage it, and we will write a contract and sign it where it all goes over into a combination of, say, crude oil and yuan contracts. Okay, so they abandon the dollar, they hedge a little bit with oil, and they go back to their native currency, and then they use that native currency to purchase property and to offer loans and to buy mines and to do construction projects in Africa. Okay? If you add up all their projects in Africa for the last 10 years, it might be about $50 billion. I think there's more to this. I think the Chinese have at least 100 billion in swaps that's never talked about. And it's to abandon the dollar risk and to put on both yuan, their native currency risk, and euro risk. I think the Chinese like the euro, and here's evidence. Remember about 5 months ago, the Chinese went on a shopping tour to buy Italian ports. Mm-hmm. Trieste, Palermo, Sicily, Genoa, and another I can't remember. Okay, on both sides, the Adriatic side and the other side has Sardinia. I think they have plans. They also installed a gold trade note as a guarantee vehicle. That's not the right word. As a guarantee, using it as a vehicle for a guaranteed fund for Italian trade. I don't think they've got that much Italian trade in mind. I think they've got EU, European Union trade in mind, and it's going to pass through the Italian ports. So, I think the Chinese like the euro. I think the Chinese are going to go on continued shopping sprees in Europe. They recently, I think about 6 months ago, had a panda bond issued for Austrian, got to get that right. Mm-hmm. Austrian European sovereign debt. They used a gold trade note to guarantee as a guarantor,
Mm.
which means if Austria reneges, China comes in and takes their gold.
Right.
This is a linkage. We're not going to get gold currencies. We're going to get gold trade. We're going to get gold trade. No, we're going to get trade that's backed up by a gold instrument. We're going to get sovereign debt financed by means of collateral of a gold instrument. Down the road is the gold currencies. Okay. Japan. I noticed something with Japan about 2 years ago. They started getting rid of, dumping treasury bonds.
Mm-hmm.
Not on a very big scale, but on a noticeable scale. And what they were doing, I heard, was buying gold.
Mm-hmm.
And the U.S. came in and threatened them. They might have killed a few people. That's not in the news. The U.S. kills people all over the place, and it's not in the news. The Clintons have killed 120 people, and most of them are called suicide. Our political arena has the highest suicide rate in the world on an official basis. Okay, so Japan was loading up to some extent with gold, while following Fukushima, they were signing deals for energy provision with Russia.
Mm.
Now, it's one thing for the Bushes and the Rockefellers and the Vatican to organize Fukushima. Let that sink in. It's one thing for the Rockefellers, the Rothschilds, and the Vatican to organize Fukushima, but they didn't expect the consequence would be Japan cozying up with Russia on Sakhalin Island LNG facilities to deliver to Japan.
Mm.
And the U.S. doesn't like that. I don't want to get into much of Fukushima. I said enough. So Japan is breaking away from the dollar buying gold. Japan is breaking away from the U.S. alliance by teaming up with Russia for LNG gas provision. And the United States stepped in and said, wait a minute, you got to continue buying treasury bonds or we'll kill you.
Mm.
One by one, we'll kill you. So in the last 6 months, Japan has been resuming their treasury purchases, but we don't know about their swaps.
Gotcha.
Okay, for me, I heard about a tricky thing from a real slippery guy. He said, Jim, write a contract, but just do a second contract that you don't talk about to reverse the first contract or to reverse portions of the first contract that you don't like. So you do two, you show one. So maybe the Japanese have been buying treasury bonds and have been engaging in rather large-scale swaps. And it shows up on the tick report as buying, but with Goldman Sachs' help, or maybe they're smart enough to use Nomura, which is big in Tokyo.
Mm-hmm.
Maybe they just do a swap in-house. But it's very hard to hide a swap. When it's like, say, 20 billion or 80 billion or 150 billion, very hard to hide because you get some transactions jostling behind the scene right after it's signed so that it's in force. And you get the eyes in Deutsche Bank in London and New York all looking and saying, wait a minute, what just happened in Tokyo? What's that all about? So then come the questions and more investigations. Maybe they kill somebody. Defending the dollar is about war and kill right now.
Yeah.
Okay, so that's a little bit about what's going on.
What's your last point on that you wanted to drive home to the viewers?
Okay.
Because I want to tie this in. My last point will be a quick look at cryptocurrencies and how they may play into this. At least just look at Bitcoin. So go ahead.
In the 1980s and 90s, there was a chairman of the Bank for International Settlements. It's commonly referred to as Basel. The Bank for International Settlements is BIS, and their home is Basel, Switzerland. So Bank for International Settlements, Basel, and BIS, it's all the same bank. It's a central bank for central banks. If a big sovereign central bank gets in trouble, they ask for help with loans of gold or whatever, advice, whatever, contracts from Basel. Okay, the chairman of Basel back 20 years ago or more was a fellow named Jelly Zielstra. Jelly Zielstra was Dutch, and he was a brilliant fellow, and he had really good leadership. There's another fellow who 10 years ago was active, and he was the chief economist. His name was William White. And together they came up with an end plan, because they saw that departing from the gold standard with Bretton Woods in 1971 was going to eventually cause a very big problem. And they actually said that the central banks would act like buyers of last resort and work themselves into a corner and be loaded down with enormous balance sheets of impaired sovereign bonds. They actually predicted that. So they had an end plan where the central banks would secretly acquire a shitload of gold, a boatload, a truckload of gold, and do it secretly, and use closely aligned financial firms to acquire the gold and keep double books with 2 balance sheets and 2 accounting books, so they could accumulate the gold, get rid of the impaired bonds that they bought as buyers of last resort, and then engineer a 10-fold increase in the gold price. Okay, Jelly Zielstra and William White were basically saying that you take, say, a benchmark $1,500 gold price, make it 15,000. And after these central banks who got themselves in trouble buying up crappy bonds, like the subprime treasuries, they can get bailed out by a 10-fold increase on their recent gold acquisitions, which would probably do harm to the treasuries, but they're not holding them anymore. Mm-hmm. That's the end plan for the Rothschild franchise central banks. Now, there's a fellow named Hugo Salinas Price out of Mexico. He's a big silver advocate. He's got a Plata MX website. I don't know the exact letters for the name. And he says he got word privately that a few central banks already were starting back in the summer, June, July, August.
Okay.
Closely aligned financial firms doing the purchases all on the QT, using double books and accounting statements that they falsely represent to the public. They don't want to start a run on gold where the public says, if the central banks are buying, I'm going to buy some too. So the central banks continue to put out the negative propaganda against gold. That's a tremendous point for motivating anybody to disregard the public news, the official news on gold, and go out there and buy some. And I think you got to load up on silver because the gain's going to be bigger.
Okay. Gotcha. So, where do we head from here? We've talked about a lot of the issues, right? What is the solution, to this? And I want to know from, you talking to an individual who's everyday person, middle-class individual, is it just simply just buy gold and just, that's it, walk away? Or is it something more detailed than that?
There are many steps. Don't go out and increase on your leverage. Let me give you an example. Suppose you're living in Dallas or Austin, Texas, and you've got a couple rental properties and you got some good income and you got some savings. Don't buy another. Don't
so you think we're going to have a deflationary spiral then?
Well, let me continue. I'm trying to answer your question. You want me to go off in that direction. I'm not going to right now. I'm sorry. Don't increase your debt leverage. Don't increase your credit portfolio. Okay, another thing. Suppose you are thinking about expanding your business. Don't. Just accumulate some good profits. Don't expand with another product line. Don't expand with 2 more stores if you got 8 successful. Be content. don't increase your risk. Don't increase your credit portfolio. Another thing is, don't take time off to do some retraining. Like, oh, I want to go back to school and earn another master's degree because that'll help me in the job. No, be content with what you have if it's working. That's a very big philosophy to adopt. And it's a little bit difficult, but it's easier during a perceived crisis or the onset of a crisis.
Right.
Okay, as for purchases and asset allocation, you got to sell what these clowns and heretics are buying. You got to sell your bonds. You got to sell your stocks. And it's hard to do if you think it's going to go up more. But you got to be content. Since the 2008 stock decline, which stopped at the S&P index hitting 666, you got to think, wow, I've got a nice triple or quadruple. I'm going to sell it and convert to gold and silver bars and coins, not the exchange traded funds. Those are instruments to keep the price down. I don't want to get into a long discussion of the GLD fund and the SLV fund, but they're used to dump on the market the metal. It's just sickening how people fell into that. Oh, it's so convenient. It trades like a stock. Yeah, well, you're such an idiot. You didn't research it. Okay, people need to sell their stocks and bonds and move to gold and silver, and do so without the financial instruments. And that might mean you load it up in your basement. Might mean that you create a little safe door behind a painting in your study with a combination lock. It means you need to do something clever, because if you're lazy, you're going to get whacked. I think that we're starting to see some evidence that the dealers are under pressure because they don't have a lot of inventory, and they're playing games with the premium. And to me, it just stinks of shortage. We're going to see a lot of shortage. People are going to say, but I can't find any. Well, keep looking. Call up, oh gosh, his name is Greg McCoach. He's in Denver, and he's got a silver and gold coin business, and he got free delivery. Ring up Silver Doctors. They sell a lot. I'm on interview shows with them. There are numerous places that have gold and silver sales, numerous. But you've got to get away from what they are promoting. They're trying to get you to stay in stocks. There's going to be a continued rally in bonds. Well, I think there's going to be a continued rally in bonds until there's not. And when is there not? I think the not is going to be when you get down to very small bond yields and central banks start to realize, hey, wait a minute, we're not getting any return on this, so we're going to go to gold because it's rising. And all this nonsense about gold doesn't earn anything. Well, it's going to earn capital gains, and it already has this year. Gold has outperformed every asset class this year. So to say it doesn't earn anything, well, are you forgetting capital gains? Oh my gosh. If you're owning a bond, it's not a coupon bond, you don't have any earnings either. It's the coupon that earns the interest.
Right.
Okay. So.
And if you own a stock that doesn't pay dividends, same thing.
Same
right?
thing. Just holding paper gains.
Yeah. So understood with that. And lastly, just to kind of wrap it up here, Jim, cryptocurrencies. I know, you're not an expert. I'm not looking for an expert opinion on it, but just I want to get your take on it from a person from the outside looking in. Bitcoin just shot up yesterday over 30%. I don't know if you knew that, but it shot up over 30%, and it was on the backs of what President Xi said about them looking to start their own digital renminbi. I don't know if you heard about that. It's not going to be a cryptocurrency, but it's. I haven't gotten the details on it, but they want to basically get in front of whatever Facebook Libra project is looking to do, if that even ever gets off the ground. I don't think it will. That's a whole nother conversation we could have. But give me your take on Bitcoin, where this plays into this whole new era we're in, and how we're looking forward.
Okay, I knew you were going to put me on the spot. You warned me adequately, and you gave a nice little disclaimer to start. I'm not an expert.
Right.
I did.
But you're a smart person.
Well, in some things, not for investments in Costa Rica, which I'll cover in a minute.
Right.
Well, it's pretty hard to thrive in a buzzsaw of ingrained and systemic fraud in Costa Rica.
Yeah.
Okay. A year ago, I decided, okay, I'm just going to research this. So between reports, I spent a week. Between the next reports, I spent a week. I called and talked at length with some crypto experts. I have crypto expert in Madrid, Spain, here in San Jose, Costa Rica, and in Buenos Aires, Argentina. I've got 2 or 3 clients who are kind of experts. I communicate with them. I learned a lot.
Mm-hmm.
I still do not have much confidence in Bitcoin.
Mm-hmm.
Now, I'm going to, slice and dice this. I got some notes here. For Bitcoin to rise in value, to me, is an absurdity.
Okay.
It's cash. It's a cash instrument that easily crosses borders, and it is moved for transfers with a great facility, meaning easy. In Spanish, easy is fácil. So a facility is something that makes it easy. And therefore, if it's cash, why would it run up in value? Because of demand and maybe inadequate supply. So are we going to get some new enormous supply? Well, we're told that it involves electronic work and mining. To me, that causes giggling. Electronic mining to produce more supply. I think it's goofy. Okay, so if they decide that they're going to be a whole lot more supply, then it might go down 30%. And maybe Wall Street is letting it go up so they can use the CME futures contract again to drive it down another 80%. In the early months of 2018, January, February, I forecasted a 70% decline in Bitcoin. It was 80. I told people, don't invest in Bitcoin. It's ripe for a big fall. I had a client tell me, I'm quitting the newsletter, Jim. I'm going full-time. This is February of 18. I'm going full-time into Bitcoin trading. I said, good luck. Be sure to come back after you lose 70%. I never heard from her again. Crypto investors don't realize that something like 10 people control the market.
Yeah, it is
10 people control 90 to 95% of the movement. And furthermore, on any given day, the volume of Bitcoin trading exceeds the supply. So what the hell is going on? And you think I should trust that? I don't think so. Let me tell you what I do trust. I trust the blockchain.
Mm-hmm.
I trust the highway on which Bitcoin rides. I don't trust the car of Bitcoin. Before I get more into blockchain, I trust the utility coins, the ones that have a function.
Right.
I don't want to get into some specific names. I used to know 3 or 4 very well, but honestly, I haven't kept up with it, and one of them got ruined, so I don't want to mention names. But, like handling the invoices, coins that handle the invoices. Veritasium, I think, is going to be much different than a utility. It's going to be a platform for small business, a platform for...
Reggie's in trouble with the SEC. I don't know if you...
That's all fake. No charges. How long has it been? 3 months?
Yeah, it's been about 2 months now. They're in settlement talks now.
Yeah, right. No charges. In other words, we're going to tie your hands, prevent you from developing your business, and force you to make a contract on limiting what your plans are going to be with no charges. Did I get something wrong?
Hmm.
I don't think so. Did he commit a crime?
Well, that's what they're alleging. That's the issue.
No, there are no charges. They can allege all they want, but after 24 or 48 hours, if they don't make a charge, there are none. It's just coercion and what's the word?
Yeah, I know they're
obstruction.
Mm.
Okay, now I think he's going to be back, and he's going to be back in a limited form. And I don't think it's going to be very limited. I think it's going to be slightly limited, and it's going to be limited in a way that pleases Wall Street and doesn't threaten their stock market. Okay, I like the blockchain because it's a verifiable entity. Now, I mentioned the MERS title database from 2004, 5, 6, 7. It was the Mortgage Electronic Registry System. I might get the R wrong. I think Mortgage Electronic Registry System. Now, within that MERS system, MERS, they had duplicate usage of individual mortgages for more than one, in some cases, 3 different mortgage bonds. Would that be possible if MERS were locked in within the blockchain framework?
Smart contract? No, not at all. It would not be.
No, not at all.
So how does this all play into this new system though?
Bonds.
Bonds. Okay, I can see that.
I think sovereign bonds. I think we're likely to see sovereign bond issuance appear in blockchain. And let me just back up a bit. Building 7 of the World Trade Center, the one that fell from structural sympathy, which is a total laughing stock.
Right.
What was in Building 7? Do you know?
Weren't there gold or diamonds, something like that? Commodity contracts? I don't know.
That was the World Trade Center.
Oh, that was in the World Trade Center. Okay.
Yeah. Building 7 contained Enron fraud data.
Okay.
And JP Morgan bond fraud data. JP Morgan was guilty of double selling on the same serial numbers lots and lots of treasury bonds. They moved they moved a lot of the data several months before 9/11 to a JP Morgan facility in New Jersey, but a bunch just across the block to Building 7. The part that they didn't mind destroying. The part they wanted to preserve went to New Jersey. I tell you, it gets funny after a while.
Yeah, that's crazy.
Are you aware that before 2001, the largest private bank on the globe that was not in affiliation with a sovereign government, the largest private bank in the world was the World Trade Center?
I did not know that. No.
Why? Why didn't you know that? Because they never talk about it.
Yeah, wow.
Why didn't you know about it? Because 9/11 was a bank robbery. The biggest bank robbery in the history of mankind. Yes. $100 billion worth of gold, $100 billion worth of bearer bonds, and $100 billion worth of diamonds. Do you know why they banned the usage of bottled water on airline flights, Jerry?
No.
Because you can hide diamonds in the water.
It was crazy that the owner of that building actually took out insurance or something. Isn't that crazy, man?
Yeah. Well,
oh my God, it's just
there's
so
a lot of
much.
other more blatant criminal activity in front of your face, like all the airline stocks that were shorted beforehand, and the brokerage accounts were all in Switzerland. I think they were UBS, mostly UBS brokerage accounts. Okay, so back to blockchain. I think blockchain has a future. I think the crypto utility coins have a future.
Okay.
Because they're going to act like stocks. If an invoicing function and company thrives and makes a lot of money, it makes sense that their stock, aka their utility coin, would rise in value. Not the cash. Cash is for movement. Cash is for speculating. Cash is for, I believe,
is not an investment.
Exactly. Cash is for the people who don't act prudently to suffer big losses.
Mm-hmm.
Like my client from California in February of 2018. Never heard from her again. I've got a number of friends who lost considerable amount of money. And I said,
it's a volatile market, man. It's a volatile, and I've been in
why
crypto for 7 years.
Why is it volatile though, Jerry?
I think because it's a lack of liquidity. I mean, it's a very immature market right now. You know,
no, it's got plenty of liquidity. You got more liquidity than you've got stock. You got more movement in a given day than you have existing Bitcoins. You got plenty of liquidity. You've got 10 people dominating 90% of the market, and you've got the CME futures contract pulling it down whenever they want.
So what I'm more concerned about, Jim, is Bakkt. Bakkt just launched their futures contracts, and their futures are actually settled in Bitcoin. And Bakkt is owned by ICE, right? They just launched last month. And I think that's going to be a big threat to the price and manipulation of Bitcoin, because now there's a direct on-ramp for institutional monies to come into this market, and it has to be settled in Bitcoin. So that's going to affect the spot price of Bitcoin. So that's where my concern is with the whole Bitcoin. But it was interesting to see that you look at Bitcoin as cash, and I look at it as an asset. So I agree with you. If I assess Bitcoin as cash, then yes, I would say the same thing.
If its main function is to settle contracts and move money, isn't that what cash is?
Yeah, but it's a hybrid type of asset. So it can be used as cash, but I don't think it should be. Like you said, why would I spend something that is deflationary? You know, that's
well. Why would you want to use your Bitcoin if there's a 15% fee for buying concert tickets? I mean, I don't
exactly. That's what I'm saying.
I don't like anything about Bitcoin.
Yeah, that's what I'm saying. I would never use Bitcoin as a cash. I would use it as a secondary asset, like a digital gold. It would be.
Now your 1040 forms have a box saying, do you have a Bitcoin account?
Yeah, I know.
I know of other cases where people have been given $100,000 tax bill because they were doing crypto trading, and the burden is on the person.
Yeah, and it wouldn't. And like I said,
I don't like anything about Bitcoin.
Yeah, that's what I'm saying, Jim. It can't be, because if I use Bitcoin as cash, and like I go buy something, that's literally me selling an asset. That's like me selling a home every time I buy a cup of coffee.
Well, you can call it an asset, but so's a $20 bill an asset. Yeah, it's an asset. I use it to buy groceries. I don't like using it to buy groceries.
Are you familiar with
value here in Costa Rica? It's up 10% in the last 2 years.
Speaking of blockchain. Yeah, speaking of blockchain, are you familiar with EOS?
EOS.
No. EOS.
No.
Okay. Yeah, that's one of my favorite ones, Jim. It's like you said, it's blockchain. It's a decentralized operating system where you can run various applications on top of it. You can do anything you want and build anything you want on that. So I agree. I think blockchain is going to be bigger than Bitcoin. We may disagree on the whole.
No,
Bitcoin
I think
itself,
blockchain is big and huge and valid.
Yeah,
I told you that I thought bonds would be issued in blockchain.
Absolutely.
To prevent the JP Morgan duplicate fraud.
Yeah, absolutely. Actually, and it's funny. That's funny you said that, because guess what? Deutsche Bank just issued, and I'll send you the link. They just issued a bond on the EOS blockchain.
Well, I think that's a
Yeah.
validation of EOS in that case.
Yeah.
And here's a good disqualification of Libra offered
Yeah. I
by
can't. Yeah. No.
Zuckerberg at Facebook. He was in Congress, I think, in the last week or 10
Yeah.
days.
Mm-hmm.
Both sides of the aisle gave him a lot of shit.
As they should. It's a threat, right? It's a direct
Well,
threat.
no, no, okay. If the central banks are going to adopt Libra
Mm-hmm.
and say that it is the Basel favorite, and there's going to be some digital coins and like a bit a crypto phoenix.
Mm-hmm.
I'm just speaking speculatively, hypothetically. I keep hearing that Libra is going to be the adopted cryptocurrency from Basel and the central banks and the boys,
I
the
just can't
cabal,
see.
the banker cabal.
I just
Well, if
can't
that's the
see it.
case, why they give Zuckerberg such a bad time at Congress? The look on his face was kind of surprising. It's like, oh my
Yeah.
gosh, why you
I,
give me such a bad time?
I just can't see it, Jim. Like, is no reason for them to use Libra, which is essentially an SDR. It's a private rendition of an SDR. You know, they're taking five different fiat currencies to compose this Libra coin. Why not just use? Why not the IMF just create their own digital SDR, which I think will be something they'll eventually do. They'll have gold,
Maybe they
various
will.
fiats. Yeah, I think that's what they're going to do. There's no need for them to adopt a Facebook SDR. Essentially, is what I call it.
Okay, there's something that I learned about cryptos and the blockchain generally, the whole atmosphere, vehicle and platform, and it's two principles of the crypto world that rule and cannot be violated, and they are transparency and decentralization. And these are important. I'm glad I remembered this because we're trying to touch on a few things here that are important.
Mm-hmm.
And notice that about a year ago, J.P. Morgan launched a cryptocurrency and it
Yes,
completely fell
JPM
apart.
coin. Yeah,
What was the name?
JPM coin.
JPM coin. I laugh because they didn't adopt either transparency or decentralization,
Right,
and
right,
it was
right.
noticed, so it got killed. And that's a good thing. You don't want a violator on both principles to thrive. Okay, so it went away. Now, if Basel has an adopted cryptocurrency, I don't want to say utility coin, if they have a cryptocurrency and they want it to be used to settle trade between nations, and they've got a cryptocurrency and they want it to be like a valid, acceptable form to purchase a bond that's within a blockchain. Okay, those are potential uses. If Basel has an adopted cryptocurrency, I don't want to have anything to do with it. And I don't think the crypto world is going to want to have anything to do with it for two
Mm-mm.
reasons. They're going to keep things non transparent and they're going to keep everything centralized.
Yep, yep.
They're going to violate everything that is in primary principles for the crypto world. And therefore, I think they might not bother because they've been doing these little trial balloons like the JPM coin. There have been a couple of others. I mean, you've also got one that I thought might get more traction, but it's really coming out of a messed up country in chaos, and that was the Petro
Yeah,
by
yeah,
Venezuela, backed by
yeah,
oil.
yeah.
And I think Russia got in there and said, drop this. You're bankrupt. Drop this. You're in
Yeah,
chaos. You can't even agree on who your president is. You
right.
got debts with China. You got other lesser debts with Russia. Leave it alone. Now Rosneft is coming in, and they're not mentioning anything about Petro, the cryptocurrency.
But remember, Jim, you talked about us doing that, creating the United States. Me, I'm saying us creating a secondary currency, and I thought about you when the petrol was created, the petrol coin. because they were trying to offset some of their liabilities, and basically use that coin as a blow off valve,
Well, they're trying
for
to
lack
get
of a
around the
better
dollar for
words.
trade payment,
Yeah.
Jerry.
Mm-hmm.
That was the main thing. And instead they're going to let Russia take all the oil, manage the
Right.
operations,
Right.
get rid of half their Venezuelan employees, and sell all that oil outside the dollar. They're going to be selling it at RMB. They're going to be selling Venezuelan oil in euros. So they didn't go with the petro because they're going to go instead through Rosneft in Russia with RMB and euro currency.
Mm.
This is all, very high level chess
Mm-hmm.
and a lot of head faking and a lot of stupidity.
Yeah.
And
Yeah.
you got to keep your head screwed on. You got to watch out for stupidity. And do you mind if I cover a little bit? We've gone now for just about an hour and a half.
Yeah. I want to
Um,
cover your website really quickly, if you
yeah.
can.
Well, let me introduce the website. As of January of this year, I got a new website. I kept the same name, but I put a hyphen in there. We wanted to keep all the continuity, but it's www.golden-jackass.com. It's very friendly to the portable devices, and they're more than half of usage now. That
Yes, it is.
amazed me,
It is.
and it's growing. I noticed, for instance, that 10 years ago here, I've been here just about 13 years in Costa Rica. I noticed way back then I had my choice of 7, 8, 10 different internet cafes.
Mm-hmm.
Now there might be two, and maybe it's one. And my favorite one just shut down 6 months ago nearby home when I'm like have electricity power outage
Mm-hmm.
for whatever reason. One was a truck hit on a utility pole. We were out of power for 24 hours.
Wow.
So I got to go find another place. What I've done instead is I take my portable, I go to a mall and I plug it into the wall and I do my work and I go home,
Mm-hmm.
and 4 hours later I do it again for
Right.
another meal. It
Right.
works. But anyway, got a new website, and not just as friendly portable devices. It's got a wider format, got better graphics, and
Mm-hmm.
it's just a whole lot better. And my thanks to I call him a captain in Western Europe. He's a smart guy, and he's making a lot of different improvements, like engine searches and various things for marketing. But on the website is some free material with public articles. I haven't published one since August because I've been busy. I've been busy watching all the developments of this gold explosion. Every day I read up something about the bond market from the breakdown.
Yeah.
But there's a lot of free material. I try to have a link for every single public interview I do, and I expect to get one for this so I can
Mm-hmm.
help the traffic.
Mm-hmm.
Um, but there's another thing I'd like to mention, Jerry. It's a little humbling, but I've done this a few times now, so it's not as humbling. I got myself in trouble in Costa Rica. The first 3 or 4 years, I did a lot of very nice things for one particular family, home room extensions, bedrooms for little kids. So they're about to be teenagers now. They got their own little small bedrooms. They're not sleeping with their mother. And then I did something else to help out. And then I helped to prevent a foreclosure. But then I got involved with a truck and car parts business, and then I got involved, branching out a little bit, looking for independent income, because I got a little bit frightened. I thought that the dollar might have some trouble by the year 2012, 13, and 14.
Mm-hmm.
I didn't have a 4-year forecast that QE was going to come in and save the day.
Right.
I thought the dollar was going to have to go through a serious decline, default, and reform. The bond would go through a default, and there'd be a reform of the dollar. And I didn't know what was going to happen with the newsletter. So I got involved getting a couple properties, and they each had fraud. I mean, a lot of fraud. Title fraud, contractor fraud, attorney fraud. But the doozy was the truck and car parts business, which became a crime scene. The guy went to prison, and so was his major partner. A lot happened after that. It's pretty ugly. But I had 10,000 in losses every month for consecutive months. It was like for 15 consecutive months.
Wow.
It was minimum of 10. There were a couple months with 30,000 in losses. I had a fine of over 70,000 to close that out because I was a silent partner for a criminal business without the voice. They promised us with some early fines that there'll be no final fine, but they lied. When it comes to documents and legal prosecution and legal maneuvering, it's all lies here. Every single gringo I know is a victim of attorney fraud. Every single one. I've got stories of crime victims being turned around and the victim was thrown in jail and extorted from by the police, the attorney, and a judge. I've got losses that are over a couple 100,000 here. And I'm asking people, this is hard. I almost had to shut down the newsletter early this year for losses. And, you know, to be honest, the newsletter peaked a few years ago. It's still going pretty well, but I wasn't able to cover the losses. There have been a couple new losses recently that are not having to do with fraud, having to do with medical problems for my lady. And it's tough, but I'm not going to walk away. I'm a loyal friend. I'm asking people to drop by the Golden-Jackass news website, golden-jackass.com website, sign up for the newsletter, and amazingly, about 20 people have signed up for the newsletter and made a $50 or $100 gift. Just amazing.
Nice. Yeah, there's a donate button at the top right corner, guys, as you can see on the screen.
It's yellow.
Yeah, yellow button there, and definitely get over there. You can donate through PayPal.
It's worked very well. There's also
Absolutely.
a why donate, which explains in more detail. I don't like to get into too many detail. I like to keep it a little bit general, but I will say that there have been donations, small, medium, and large. They've helped me out, and they've made me more confident that I won't have to close down the newsletter. But at this point, I'm looking to offset some of the profound losses. Half of the losses were just from the parts business. Half of them. And, you know, I gotta say this for the folks out there who are spiritually inclined. And this isn't just Christians. It's people who believe in the spirit world, who believe in positive framework, positive frequencies, like communicating with a friend. Oh gosh, why'd you call me? Well, I was just thinking about you because I got a very big problem. Okay, just frequencies among humans. In March of 2017, I began talking about the pedophiles and the ritual killing of children with their traffic rings. In the next 6 months, I had an explosion of about 7 major costly problems, all of which took over a year to clean up. It all started after my multiple interviews where I was talking about the pedophiles and the ritual child killings. I can point to 2 other losses, like, you know, fixing ceramic floors that broke for various reasons. Another problem was an electrical power box. That happened before. 90% of these losses have happened after March of 2017. I feel like I'm under demonic attack. I'm not sure it's over. So I'm asking for donate button help. I'm also asking for prayer protection help because I think I'm targeted. And I know that might sound pretty goofy and funny and weird to some people. Oh gosh, Jim, you made bad decisions. Can't you admit? Yes, I made bad decisions, but I am way past 3 standard errors for the typical, ordinary, mean level of Costa Rican fraud. I've got a lady friend who just sold her house. She took a $60,000 loss. She said, I want to get the hell out of here because I had about $80,000 in fraud costs.
Wow.
An attorney, contractor, you name it. You got to ask for your bill of lading and receipts and check them out thoroughly. You got to hire a second attorney to check your title for a property because odds are 50% the paperwork is fraudulent. I got defrauded from my first residence application. The guy made off with close to $3,000. He also made off with some documents that I'm having a hard time replacing. The immigration office, they're involved with extortion. It's all over the place here. I'm much more cautious, and I haven't been defrauded in quite a while. But I'm telling you, it's painful, and it cost me a big fund that I had to cash out 2 years ago out of Pennsylvania. Because I had to cash out of it to pay the bills, to pay the $80,000 fine. So if you're, I don't want to use the word freeloader. If you're what's the word? If you're a surfer on the internet and you've been listening to a lot of my interviews and you've enjoyed them and you've benefited, you've learned, you've invested some, drop by and make a donation.
Yeah, that's what I was going to say. Jim has been
like that.
Jim has been giving us content for many, many years on YouTube, alt media. He's legendary. So definitely, guys, jump over to golden-jackass.com and you'll see the green or yellow button, I should say, in the top right. Yeah, top right corner, and help Jim Willie out. Always a pleasure, Jim, having you on. We're going to ride down that yellow brick road again.
The yellow brick road is going to be for a trade payment across the entire Belt and Road Initiative, and they're extending to Europe.
Well, there you have it, guys. Dr. Jim Willie, editor of the Hat Trick Letter. Always a pleasure having him on my channel. Make sure you guys like, share, and subscribe, and click that bell. We're out of here, people. Holla.